Welcome to Nasdaq TradeTalks, where we meet with the top thought leaders and strategists in TradFi, digital assets, technology, and financial planning. I'm your host, Jill Malandrino, and joining me on the desk this afternoon, we have Adam Farstrup, Head of Multi-Asset Americas at Schroders, Laz Tiant, Sustainable Investment Analyst at Schroders, Charlotte Peyraud, Co-Head of Sustainability Advisory Services at Houlihan Lokey, and Roselyn Feinsod, Principal of People Advisory Services at EY. They join me to discuss how the labor force relates to profitability and driving better outcomes and what is reshaping the economy and the markets. It is great to have everyone with us. Welcome to Trade Talks and, of course, to MarketSite. Let's go around the horn here for a moment. Adam, we'll start with you and then over to Laz. Explain to us your thoughts from a macro perspective, also from labor, and where you're seeing employers and employees being challenged.
Sure. Thanks, Jill. So I think the thing that to really talk about is some of the disruptions that are happening in the economy. We have the normal economic cycles going on right now in the headlines of where does unemployment fall. But if we think about the larger trends and some of the disruptions that that's creating for employers, we think about it in the context of something we call the 3D reset, where we have these structural forces of deglobalization, decarbonization, and demographics impacting the global economy. And when you think about a common through line in that, right, it's the worker. So demographics is the fact that we have an increasingly scarce workforce, particularly in the developed markets like the US. But when we look at things specifically like decarbonization and deglobalization, they present some really unique challenges. So here you can think about decarbonization is the idea that we have rapidly increasing energy demand, particularly electricity demand. So between now and 2050, we forecast that the global economy has to spend something like $100 trillion on its energy infrastructure. I mean, that is an unprecedented level of spending. But within that, you're seeing a shift in what kind of spending is happening. And this is coming in Europe in particular from an environmental perspective, but now increasingly from a national security and an economic security standpoint, where countries are saying, how do I make sure I have control of my supply chains, my energy supply? And that ties into this idea of deglobalization that we've seen post-pandemic, where people, again, thinking about that security of supply chains. So what does that mean for the labor force? What we see is you need very different skill sets. You need a different approach to thinking about how do you get workers, because you're worried about labor cost inflation as an employer. You're worried about what kinds of skills do I have. So if we think about things like the CHIPS Act, the Inflation Reduction Act, it's creating capital investment in the United States, which is very good for our long-term prosperity. But who are the workers that are going to fill those jobs? Do we have those skills that we need? All of these things are bound together and creating really significant disruptions for our economy and for our employers in the economy.
Right, and Laz, that's really what the challenge is. You can have aggressive goals on paper. You can legislate aggressive goals on paper to meet certain demands that we need in terms of energy, but if you don't have the workers to execute on that, it doesn't matter what's pen to paper.
Yeah, I completely agree. And my job as a sustainable investment analyst is to work with different asset classes and portfolio managers and analysts, looking at these companies, looking at the macroeconomy, and really understanding the implications, right, the risks and the opportunities that come of it. And this nexus where you're seeing climate issues and climate adaptation and a transition really intersect with people. Right, and when we think about these different stakeholders that companies are exposed to, it's their employers, their employees, I'm sorry, the people that they bring in to develop the products and services that they generate revenue from. It's the communities through which they are actually physically operating in or providing services to. It's the regulators that in some cases provide a license to operate and really change the landscape for them. And when you think about these different stakeholders, it really comes to bear to understand how do the companies move forward, right? In the context of the just transition, when we think about the socio-economic impacts of moving to a more low carbon economy, we really want to understand those different industries and sectors that traditionally have operated one way but are evolving and changing, and therefore need to either reskill their workers or are bringing their operations elsewhere. There's an opportunity through things like the Inflation Reduction Act to onshore jobs where manufacturing may have been in other regions but can be brought home. There are other instances where there are going to be key components of what we need, like lithium and battery materials, solar power materials, that we just simply can't source here in the US. We don't have the mines to be able to do it. And if there are the mines to be able to do it, there are unintended consequences, like things like water scarcity in California, where there are things like lithium mines. From a risk perspective, there's also the suppliers. Those are the other stakeholders that we have to think about, and that's a labor question as well. It may not be your direct employee, but that's how you are sourcing what you need to develop your product and service. We're seeing it in the wind industry, right, where you have the Osage Nation dealing with wind turbines and wind farms on their land, where right now companies have to retreat those projects which have been put forth for quite a while. And so when we think about the saliency and materiality as it relates to the company's financials with these issues, they're real, right? And we want to be able to understand from the labor perspective how they're threading that needle and changing the way they operate.
And Charlotte, from your perspective?
Yeah, so picking up on the threads of decarbonization and deglobalization, a lot of the regulations and policies that have been put forward really are attempting to hit on both parts of that. So taking the Inflation Reduction Act here in the US as an example, as well as policies in Europe, which I can discuss as well, it is focused on scaling up decarbonization technology, but it's also, they have incentives in place to make sure that there is the onshoring of manufacturing. So it's estimated also that there might be about 9 million jobs created by 2030 with the IRA, and obviously there's some policy discussions on what the exact number and what these jobs are going to look like. But there has been a very big focus on ensuring that there is a quality workforce to pull from in order to ensure that these projects are able to be done. So the IRA has actually put in place a few incentives and bonus credits to really ensure that there are quality jobs, that they are pulling from communities and individuals that might be negatively affected by the transition. So a couple of examples for renewable energy projects, if they are located in energy communities, and the IRA is defining that as a community that has had a higher amount of revenue or tax from oil, gas, and coal, and is also facing a higher than average unemployment rates, that would provide a higher subsidy for the energy credits. And we also see the prevailing wage and apprenticeship bonus, and so that's really ensuring that there are high quality and high paid roles for these projects, as well as leveraging apprenticeship work to really build out the workforce there. And there's a 5-time multiplier if those are met.
Right. And we'll get to that in just a moment. I know we were talking about that off camera, Laz, getting the appropriate training and education to fulfill these jobs, there's 9 to 10 million jobs that you were referring to. But Roselyn, it sounds as if at the end of the day, humans are at the center of all of this.
Yes, so at EY, we've done a number of critical thought leadership things from an outside-in perspective to understand, do people matter in the age of all this amazing technology and business transformation? And so we surveyed nearly 1,000 executive chief transformation officers, and what we found is that the companies that were focused on their workforce at the center, humans at the center of their transformation, were 2.6 times more likely to be successful with the outcomes. And it started with the right vision and leadership and empathy, giving people the chances for things combined with the right process and technology. And a really interesting and unintended consequence of a global health crisis that we are finally officially out of is that there is now a unique tension between employers and employees in terms of employers really struggling with some of these challenges that are cyclical in the markets right now, needing to manage the economic forces and all of the business transformation and energy transformation, but then the cost of labor and being able to then satisfy the scarce need of employees who, are a new demographic, as you were mentioning, new generations in the workforce who are not as committed to a single employer anymore, and are, whether they might not be the great resignation anymore, but they might be grumpy staying or quiet quitting. And how do you get them to the right point where they're aligned so that everyone's rowing in the same direction so that you can get to that better success rate on transformation?
And of course, and let's go back to that for a moment here. If the American education system isn't providing the right skills necessary to get these 9 million people employed with these special skill sets, who's taking the lead here? Are companies providing this training, or is it strictly vocational?
It's part of the company's problem, and it's part of government's problem too, to be able to, one, make sure that the education system is functioning, making sure that teachers are able to actually effectively teach and have an efficient enough process whereby they're able to provide the nurturing capabilities that are required from students. I think when you look at what companies are looking for in terms of future skills, less hard skills, more soft skills. that is more of a nurture problem than providing text. And when it comes to the technology in the ed tech space that is allowing for this, it's difficult in a in a country where the public school system is going to dominate the makeup of students and how they're able to be taught. And so that's one side of things. But when the companies understand the roles, the skills that they need going forward, it's really important for them to be engaging with the K through 12 system in some cases, but also much so higher education and the vocational programs, particularly in the context of this energy transition, when jobs such as welding, there remains a shortage for that. But the transfer of skills for someone who, let's say, is offshore oil drilling to then be offshore wind turbine development, that's going to be a skill that we need the vocational programs to be able to also play a role in. Same can be said about the transfer from internal combustion engines to electric vehicles. We're coming down to more software-based mode of transportation. And so you do see vocational programs actually tweaking their curriculum to be able to bring these new skills to bear for their students.
I'm sure they'll be happy to hear about that when it comes to affordability, but let's look at this at a more macro perspective, Adam. The fact of the matter is, if we can't get these people trained, we can't get them employed, that's really going to stymie these projections that you have for the economy and for the markets based on this 3D transition.
Yeah. So, I think the critical piece in this is, we think about a lot of these forces in the near term create inflationary pressure because we have either not enough workers or workers with the wrong skills as employers are trying to rapidly respond to what's changing in the environment. And so you've seen that in wage inflation, you've seen that in the Great Resignation, and some of the frustration that we see within the workforce. Going forward for an investor, you're thinking about, well, how quickly at a macro level can the economy respond to that, right? So what is the role of automation technology, which is both a threat to individual workers potentially, who don't have the skills to engage with that automation technology in the way that they might have thought about their working career even just 5 years ago, right? But at the same time, if we don't solve that as an economy, then we're going to have other structural problems in terms of the ability of the economy to grow. So you have those forces in tension that require, I think, companies to really take a long-term view. The things that Laz is talking about, and I think the things that you've talked about, really require you to think multiple years out, and the return on that investment can't be next quarter. We have to really play it all the way through.
Particularly with AI, right? When we're talking about a knowledge-based economy that's beginning to grow more dominant, that's where those soft skills are going to come into play. Creativity is going to be really important in the use of things like generative AI, more so than mathematics, because that's the kind of capabilities that it's helping become more efficient with.
Right. And Charlotte, what's the private sector doing in terms of initiatives and strategies to be able to fulfill this mandate?
Yeah, so it really is drawing on, again, making sure you are attracting the right workforce. There's some interesting elements as well if we're thinking about more the just transition and transitioning sectors, where we've seen even the use of sustainably labeled debt as a way to highlight the transition strategies that they have in place and the initiatives that they're working for. So say utilities as an example, when they are decommissioning coal power plants and they know that they have to work with the community to explain what they're doing, but they then are really working closely with the employees to reskill where possible, and if they need to relocate, in some cases, to do that as well, but being very transparent and clear with their transition strategy, and then finance some of those strategies via the use of a green bond or a transition bond. So that's an area where we've seen some interesting work.
Roselyn, have employers and employees kind of made it through the post-pandemic era yet, or is there still a tug of war happening?
Unfortunately, they haven't. I mean, that tension is still there and it's still real. On the knowledge side of the house, the tension around return to office, as one example, is one that we see headlines every day around employers, in some cases, announcing 5-day mandates of you must be back at your desks, and employees just ignoring some of those. And so I think there is a need to really rationalize the real estate portfolios and say that does become an opportunity. If we have this vacant space that's not being used, how do we really make sure that that's going to be used? Because people do need to come in for all of these interesting new problems to be able to connect and collaborate. There's no substitute for that, right? But there are these big disconnects of a third of employees still want to be fully remote, and less than a quarter of employers want that. And employers are putting their hopes on hybrid, and yet people are kind of not fully there and not necessarily compliant with it. So on the knowledge side of the house, and they're very worried, employees are very worried still. While the inflation might be a little bit more under control, pay is still the #1 reason that people are leaving jobs. And in 30 years of doing HR, I would have never told you that people leave jobs for pay, but because of these blips in inflation, and people are really struggling with the cost and their impact on their household finances to be able to do that.
And I think it's really interesting, we were talking a little bit about the cost of education as well. So we've talked a lot about this importance of transforming the workforce. You think about, for an individual family, for that worker who's worried about their pay, one of the highest rates of inflation that we're seeing is on the education side. And so how employers deal with helping their employees who are worried about their own children and how they engage in the workforce, I think is...
Or how are policymakers going to help that with the big student loan shadow that hangs over all of us as an economy?
But even back to childcare, for what you were saying there, I mean, one of the great things about not having to commute, and all of us are in the tri-state area, so we're very familiar with commuting and the efficiency of our regional lines here. The cost saved by that, I mean, a lot of times people make the decision, I can't afford daycare, I can't afford commuting, why am I even bothering going to work for the additional stress of having to do the job and get back and forth? It just doesn't make sense when you can be around either for your kids or for whatever lifestyle choice you want to make. We have a couple more minutes to go here. Just want to go around the horn again. Outlook, give us 30 seconds. What does this look like?
Yeah. So I think in the near term, the markets are going to be very focused on, the job market, because we've entered this phase where the near-term inflation problem has settled down as the Fed has tightened policy rates. So we see a rapid disinflation occurring right now. We heard from Chair Powell and from the Fed yesterday that they're going to be very focused on the labor market, because in the near term, what policy does is going to be dependent on, do companies feel they need to start cutting costs? And I think there is a crossover, and this goes to the short-termism versus the long-termism. We surprised a lot on the upside of earnings last year, and I suspect that part of that was inflation actually covered a lot of sins. It allowed for corporate margins to be much healthier. So when you saw pay going up, companies could afford it because they had pricing power. As the economy begins to slow, as the policy rates have tightened, they lose that pricing power. Employees haven't given up on that need to sort of make up the lost ground that they had. And so will employers in the near term have to make choices about the size of their labor force, and then what kinds of employees do you keep when that changes?
Right, and Laz, your final thoughts?
Yeah, I mean, as it relates to what we've been talking about with the energy transition, I mean, it is an election year, and I think with things that have happened with the IRA, a lot of people are worried about rollbacks, but there's a lot within it. There's a lot around the energy transition, especially in the US, which has a lot of bipartisan related issues. I talked about the area of suppliers and the supply chain, and then the risks that are related to that. There's a lot of regulation that has been put into place in the US and abroad around really trying to understand where there's things like forced labor in the supply chain on a lot of these key components that we need for the energy transition. And so when we think about the Uyghur Forced Labor Prevention Act, UFLPA, that's a really important beginning, I think, of how we think about trade. And I think with that, I think there should be some confidence that on these issues, there could be some bipartisan views that can keep us moving forward. And I think what's important in building jobs here in the U.S.
Yeah, that would be nice, a refreshing change.
Sure,
right.
yeah.
I completely agree with Laz's points there that this really is seen to be beneficial across the aisle. So there may be a rollback, we'll see, but at the same time there's huge opportunity across many manufacturing parts that are again going to be financed via credits with the IRA and other policies, and there's a huge opportunity for the workforce in this way.
All right, and Roselyn?
And the final thoughts is just around the how. So we have a lot ahead of us. Leaders need to lead with trust and empathy. And the idea of some of the pay issues are not about exactly how much you get paid, but do I trust that I'm fairly paid? And showing the connection between the skills I continue to develop and how I contribute to the productivity and the bottom line.
All right, we'll end it on that. Thank you everyone for joining us on Trade Talks, and thanks for joining me from the MarketSite studio. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.